Well, good afternoon, everyone, and welcome to the June meeting of the Joint Internal Audit Committee, the first one by video conferencing. So I think it will be a learning experience for us all, but it is obviously a sign of the times. I think it might be useful if we each introduce ourselves to anyone who's out there watching, either live or a recorded version. So I'll start myself by introducing myself as David Forbes. I'm chairman of the Joint Internal Audit Committee, and I'll just ask people in turn to introduce themselves. So Aubrey.
I'm Aubrey Williams. I'm Research and Performance Officer for the Commissioner.
Okay. Tracy.
I'm Paul King, and I work for the OPCC, and I'm your minute taker.
Okay. Tracy.
My name is Tracy Latham Green. I'm an independent member of the committee.
Douglas.
Douglas Matthew, Audit Committee member.
Jason.
Yeah, Jason Harwin, Deputy Chief Constable, Lincolnshire Police.
Sharon.
Sharon Clark, Force Chief Finance Officer.
Gillian.
Gillian Holder, Deputy Chief Finance Officer.
Julie.
Julie Flint, I'm the Chief Finance Officer to the Police and Crime Commissioner.
Mark.
Mark Lund, Mazars Internal Auditor.
Jim.
Jim Gallagher, member of the Audit Committee.
Ian.
Ian Holderme, member of the Audit Committee.
And Helen.
Helen Henshaw, Associate Partner, Ernst & Young, External Audit.
Okay, thank you all for that. We'll make a start then on the agenda for the meeting. Agenda item 1 is declarations of personal and or prejudicial interests. Does anyone have anything to declare?
No.
Okay. Any apologies, John, for the meeting? I think we have a pretty full attendance.
We do. No apologies recorded, Chair.
Okay, thank you. The minutes of the last meeting, which seems a long time ago, but was the 27th of January. Obviously, I'll be unable to physically sign these, but we need to agree them so that as a true and fair record, so that I can sign them at some future opportune moment. So is everyone who was present there happy with those minutes, that they're a fair and accurate account of that meeting?
Yep.
Yes.
Okay, thank you. And we then move on to the first substantive item, which is the summary action log of matters outstanding from previous meetings of the committee. Can I ask any panel members, committee members, who, if they have any questions or issues to raise on any of these outstanding points that have now been progressed? I think quite a few of them have been dealt with, particularly in the last few days. But one that occurs to me is
still outstanding. The last piece of work for Lincolnshire was on project management / benefits realisation, and that was kind of scheduled, unfortunately, right at the end of March when we hit the lockdown period. So there's just been some delay in progressing that piece of work. But I can confirm to the committee today that the exit meeting was planned for today, so that draft report will be coming out hopefully the end of this week, beginning of next week. So that piece of work will conclude all the audits for the 1920 plan. Also, there's obviously the commissioning draft report is in there as well. Again, the draft report, me and Julie have had a discussion this morning, haven't we, Julie, around progressing that one. And again, that'll be presented to yourselves at the next meeting. I'm going to kind of presume the rest. I know it's quite a big report, given there's updates on all the final audit reports we've done. I didn't want to draw your attention to anything particular, so I thought I might just pause there, Chair, and just offer it up for individual questions rather than kind of go through it. That's okay with you? Okay, yeah, no, thank you. Can I just say, I think you've done fairly well to get as far on with the plan in the particular circumstances that you face. And I also think it's a source of some comfort that at least 3 of the main financial systems, bank, treasury, payments, creditors, payroll, were all significant assurance. I think that's quite helpful. And it's good positive. I do have a question myself on the fraud, counter fraud report, where there were a couple of significant recommendations. And my question really, and it's probably more for officers than you, Mark, is
The second recommendation appears to imply that the risk register that's being produced is a bit risk management orientated rather than particularly fraud orientated. And I was just wondering what action was actually going to be taken to make it less risk management orientated and more fraud and more directly orientated towards fraud, because I'm not sure the response actually gives any assurance that that's happening.
I can assure you that both my opposite number in the force and myself are actually have got planned scheduled in a review of the fraud risk register in line with some comments that Mark made during the audit around ensuring that it is fraud focused. So that's planned in and ready to take place, and it is in the action plan as well.
And can I just also clarify, going back a year, 18 months, I think Jason's predecessor was keen to divorce the two risk registers. It looks like we've come back to a single risk register again. Is that correct?
So it links, yes. Go on, sorry. Go on, Aubrey.
I was just going to say, in terms of the assurance map, yes, we've come back to a single assurance map. We still have separate risk registers, which has always been the case, but the assurance map has been combined.
I did actually, my mistake. I meant an actual fraud, counter fraud policy.
Yes, also in terms of counter fraud, it is a single fraud register for both the force and the OPCC.
Yeah, thank you. Does any of my colleagues want to ask any questions on this, on previous year's audit reports?
Please, David, if I may.
Yes, okay.
So the first one, Mark, is the easy bit, which is as a help, could we, where we have the repeat reviews, so for example, the cash management, payment creditors, etc., could we put the prior years on there as well to understand what the rating is, just to give it a bit of context? That just made things a bit easier to review. In terms of stepping through the reports, if I do one report at a time, David, then if that's all right, then if anybody else has got something, is that okay?
Yeah. Fine.
So on the income and debtors report, there was probably a question for the business and all the audit, and also then a question back for the business. On the findings, the insufficient record of 3 of the 5 cases, internal audit were not able to confirm they've been chasing, or D4S could demonstrate that they've been chasing, etc. Having off-system stuff when not working is fine, but in terms of 3 out of 5 is quite a lot of a sample that was insufficient information. What sort of magnitude was missing that we couldn't demonstrate that it wasn't being chased?
Sorry, I'm just scrolling.
That's fine, because that feels like quite a bit of a gap in the process. If we're trying to hunt debt down and we don't know we're doing it, 60% is quite a high sample issue. In the meantime, I'll throw the question over to the business for the second part, which is, whilst we've got the lowest debt balance we've got, is there a profile against that, an age profile against that? Because whilst it's down to quite a lot, if we haven't been chasing of that balance, quite a lot of it could be old and sticky.
We do produce a profile. We do a regular governance report that sets out the age debt effectively. I think the response of the team here is not that they haven't been chasing, but that there is no evidence that they have been chasing. Now, I accept that, in control terms, that's a difficulty, but they would cite as evidence of them continuing to chase that the debt is at the lowest level it's been for a long time. So
I think down is good. Like say, Julie, depending on, it's not necessarily it's just about that point of saying, actually, if it's old and it's not moving, where we're going through the escalation steps, and that probably ties up for me on that sample where we're not demonstrating, where we've not gone after it, or we just haven't got that, okay, so what stage have we got to piece? That's why I'm trying to understand what data is not being captured. So
we do publish a governance report every year that sets out the age debt report in there. So it is in the public domain. So
it doesn't come to us now.
I think so. Yeah.
Yeah, it does. It comes with a whole series of other issues like insurance and procurement.
Yeah, it's more. I'm probably, David, after more than management stuff. An annual report is fine. It's just about that daily management. That's what I'm after, really, and that's why I'm trying to unpick that 3 out of 5 not having sufficient.
It's the evidence that's missing as opposed to the fact that it hasn't been chased, I think. Sharon,
Yes.
is there anything you wanted to add?
I was going to add that obviously I see this on a regular basis, because when it comes to any old debts that we're considering write-off, they come to me with a recommendation and a full log of what action's been taken and why we've got to the stage of writing off any residual debt. So I see the age. There isn't a long tail of very old debt at the moment, and most of it is very low value. And any that is over a certain value, obviously I refer on to the Chief Constable if it still requires a write-off with my recommendations. So I go through and review why these are old debts, what actions have been taken. So I think there is sufficient management scrutiny of the age debt and what is actually being done to recover them.
And with the solution now being that we've now got it working on the system, I presume that would mean that we will be logging it as long as people still log it on the system. So they still have to go on and say they've chased it, presumably.
Mm-hmm.
Well, the system, you don't need to log it on the system. The whole point is that when the system's working normally, which it was working normally prior to this faulty merging, dunning is done automatically.
Right. Okay.
And
cool.
therefore it just happens.
Got
The
it.
reason they
Okay.
were having to log it manually is because dunning wasn't happening automatically, and now we've gone back to it happening automatically. So, you know, all
That's
the
fine.
evidence is there.
Cool. Thank you. Shall I move on to the next report, David, if that's all right?
Okay, yeah.
So on the performance management report, I suppose it's more of an overarching view back for the force that says actually when we've got whether it's MSU or EMCGS, whatever the case may be, I suppose my worry is that without actually starting off with what good looks like and what good performance will look like, you know, I'm not looking down to a series of targets necessarily, but without actually that being in place before we start, you're always going to be on the back foot. And reading through this is how do you know somebody is doing well? It has to be one of the key management tools that you have, and therefore you know when somebody isn't doing well. I'm just reading through these. I do get a sense sometimes, okay, targets per se may not be brilliant, but there has to be some indicator set in everything that we do to say that. And I'm kind of reading that and going, how do we demonstrate that either from a public money, a VFM, whatever it is, you have to set that off from the start. So I'm kind of sitting there worried slightly that we are putting things in place because they're in place as a function without putting that in place before we start. Is that fair, Jason?
Yeah, so Chair, I'm very happy to answer the question to that. So that was part of the last review that took place, because quite rightly the question and challenge put by the chiefs and ultimately by the PCCs was about the value for money. So why are we investing here? What we're getting back out of it? And actually, is it in levels that we'd expect compared to other areas? Without shelving the conversation, ultimately part of the national review was that about what do we expect in terms of regional capability, what does the good look like, and in terms of what capability do we need to deliver that. The reality, if I'll be very honest, I think at the moment obviously the national review is paused depending on the Home Secretary announcement, but what we have done locally is again taking account of the MSU and the wider collaboration is that the Deputies Board now obviously sits. Firstly, we're reviewing the Section 22s because that actually says what that product, that function should actually be delivering. And again, we're using that as a basis of where we are at the minute. Then in terms of the Section 22, with the view then is that our aspiration? Actually, should it be greater? So again, very happy, and it might be part of the regional collaboration update that we talked about earlier in the other action that we come back in terms of saying what does the good look like. We can show you more information around that in terms of not just what we're doing at the minute, but the aspiration with the change that's taking place as well.
I think that would be helpful. And again, the next step from me for that would be that's the delivery of that particular service, seeing how that's incorporated into the performance management targets of individuals, because that's when it really counts.
Yeah. Yeah, and again, this is a slight change to the region because you can appreciate it's not some of the tradition, as you know very well, it's not some of the traditional policing volume that we're dealing with. We're dealing with some sophisticated overt, covert tactics as well. So that's a little bit more difficult, but there's measures that can be done. It's been done elsewhere in the country as well.
Thank you.
Okay. Is that your lot, Ian?
Yeah, that's me done.
Anyone else on the audit progress report? Okay.
I think sorry, one for Mark. We don't seem to have the report on the book on, book off audit.
Apologies if that's.
I don't know whether that could be circulated.
Are you happy for that to be circulated outside the meeting? Apologies for that. That's just my an oversight.
Okay, thank you.
Yep, no, that's fine. Yeah, it was satisfactory. So there's obviously one or two small issues, but yeah, if that could be done,
Yeah,
if we've got any issues, obviously we can pick it up next time we meet.
Yeah.
Thank you, Douglas, for that. Okay, can we then move on to the next internal audit item on the agenda, which is item 6, the draft internal audit strategy for the year that has now commenced. Again, do you want to say anything by way of introduction, Mark?
Just to give an update, really, on terms. Obviously, we're 2021 started as of 1st of April, and we're here on the 10th of June. So I think it's just to kind of give that highlight that we have been engaging with the organisation. It's not like we've just kind of forgot about internal audit. We had a big planning meeting in terms of the audit plan, as we normally would. I think it was back at the start of March, perhaps, to kind of go through the risks and make sure we had the appropriate plan in place for the next 3 years, not just next year. In terms of obviously getting started on that plan, that's obviously just been a little bit delayed in terms of the lockdown period that we've been in, and so we haven't started any 2021 audits at the minute, but we're working closely with the force, and we're going to be having conversations around the most effective way that we can still deliver the audits for yourselves. And we've been doing audits remotely with other clients and things, so it's just kind of we're just adapting to new ways of working in terms of how we'll be approaching the 2021 plan. So in terms of the plan itself, again, there was nothing in particular I wanted to bring to anyone's attention within the plan. I thought I'd just kind of pause and happy to kind of have an open discussion around any of the elements that are in there or not in there that people would like to discuss. Okay, thank you. I mean, I think I'll perhaps preempt some of my colleagues by asking, was there any consideration given to putting anything related to the impact of COVID into the internal audit plan, rather than COVID itself obviously having an impact on the plan as drafted? There's nothing in the plan about COVID. And I think, Ian, that was one of your issues, wasn't it? Yeah, I think it was kind of at this stage, we didn't want to make wholesale changes because I think the impacts and the risks around the COVID are kind of still being established. I think what the approach that we have been taking is when we look at each individual audit, we look at the impacts of COVID within that control environment. So it might, if people have shifted to home working, there might be a slight change in the control environment, etc. So that's kind of the approach that we'll be taking in terms of, the COVID impact. I would say we've kind of got contingency within the plan, and I'd like to say we've probably got some flexibility that should there be a specific risk that needs addressing, then audit's kind of available to do that. But at this stage, it wasn't a case of we didn't want to kind of rip up the plan and start from scratch when we kind of didn't necessarily need to at this stage.
David, can I add something at that point?
Yes, absolutely.
Yeah, I mean, I think we need to be clear, whether we're talking about COVID and its impact on the organisation and the way in which it delivers, or the function of the force in supporting the community and so on in dealing with the impacts of COVID. And I think that latter point, I mean, the DCC will obviously know much more about that than I do, but in a sense, how we're dealing with that internally, it's like, I hesitate to say this, but it's like any other major incident in a sense. The force have got a way of dealing with that. So I think if I can come back to the impact of COVID on the organisation and the way it delivers the things, its finance function, its HR function, etc., my expectation would be in all of the audits that we're doing, that we will be taking account of the environment within which we're operating at the time, which of necessity would have to take into account how we're operating in the world that we're in at the moment, dealing with the impacts of the pandemic.
Yeah, thank you for that, Julia. I think in effect that's what Mark was saying at the introduction. Okay. Have any of my colleagues other issues or questions on the plan?
David, if I may.
Yes, Ian.
So again, as we said, this is a live situation, and I suppose my question to this group, and Julie kind of goes to where you've just been. We've got a plan. We had an idea. We've got the answer to respond to COVID, and there's the impact of COVID on the way that we've done some of these particular areas. Having an annual plan at this stage, I don't know if it feels necessarily the right thing to do, because in terms of sitting there going, actually, we've got a direction of travel, and it's a prioritization that says these are the things that we need to get assurance on sooner rather than later, rather this is where we planned it in. And therefore actually having that chance to go back, and I know we go back and we always challenge our internal audit plan about whether it's the right thing to be doing for the full end of the year. What I don't want us to be doing is chasing an audit plan 8 months, 9 months into the year to try and get it over the line when actually it's the wrong audit plan. So it's just getting that assurance that says, right, guys, how are we going to keep it under constant review about where and how we're going to use internal audit to the best possible value to give ourselves assurance during this time, and understanding where we think the risks have changed because of COVID. And I do take your point. It's just the layer as to, well, okay, what's the impact on the business, about why this is the right plan now and why it will be the right plan in 7, 8 months time as well. So it's just that bit that says that I would personally like to almost have that checkpoint later on in the year to go, is this still the right plan based on where we came up with in the first place? Because I've got a feeling it's going to move. And quite substantially, and potentially in some cases. Some of the repeat stuff, I get it, but...
Well, Ian, thanks for that. I would imagine our September meeting would be the time to do that, which is pretty much halfway into the year.
Chair, can I suggest something as well? Because obviously, firstly, recognising we are still responding to some degree to COVID-19. So I think it's over and done with. Unfortunately, it's not. So the second bit for me is part of we are moving towards a recovery phase at the moment, and what's called recovery and renewal phase. Part of looking at business, and this includes audit as well, would be looking at in that recovery phase of, is it still current, and raising all the points you've raised so far. So I'm very, very happy to take an action away with, obviously, with Julie and Sharon, making sure as part of our thinking around recovery and what we're doing and not doing, we give that some thought as well.
No, that's very helpful, Jason. I think we welcome that. I think, Tracy, do you have a point?
Yeah, I'm not sure if this is the right place to bring it up, or maybe it should be later in the meeting, but I think that there are probably some positive outcomes from the way that we've had to work during COVID that could result in like efficiency in working, time saving, avoiding taking the train all the way to London and wasting a high-level officer's entire day on public transport when they could have just done a video call. So I think that we need to explore those opportunities, particularly when dealing with central government, who seem to think that London's the be-all and end-all and everywhere else isn't important, because they could really impact positively on us as a rural county in not having to do those kind of things and work in a more creative way. Let's look at those as well. I'm not sure whether we can put them into the next meeting to review them, or if you can give us an update of what you're doing and maybe make sure that they're being exploited to the full as part of the internal audit plan. I'm not sure, but something to think about.
Yeah, and again, very happy to do that. That's part of the renewal piece. So part of the recovery, we're saying what's the new things we want to do as a result of the COVID, because there's been some massive learning, both positive, and most of it has been very positive, if I'm very honest. And again, very happy to share that, because we are going to formally do it as a project within the change programme within the force as well.
Actually, I'm not so sure it isn't an item for the value for money plan, to be honest, rather than the audit plan. Can I just raise one question it's actually on the strategic plan, where I noticed that in 21-22, down for consideration then as a agenda item for audit, is the G4S contract management. Does that the timing of that sit well with any potential extension or non-extension of the current contract?
If I may, Chair, I think it does, because at that point we'll be very clear whether we are extending or whether we are extracting ourselves, in which case being clear on what's going on with contract management will be really important.
Yeah, that was just my question. Is its timing right? And you seem to be seeing it.
Well, because the end of the current contract period is March 2022.
Right.
So that would be in the year before the current contract is coming to an end, and either at that point we'll be looking at the new arrangements or looking at the extension period.
Okay. Right. Yeah. Any other questions, issues on the plan? Okay. Then we can move on to the final internal audit item, which is the implementation progress report, item 7. Do any of my colleagues have any issues or questions there that they wish to bring up for clarification? These comprehensive responses. If I can just mention the collaboration, strategic financial planning and business planning, it seems to be what tended to be an issue meeting to meeting. There seems to be some delay in perhaps getting responses from other from the lead authorities potentially regarding those audits. Because in both cases it mentions an update being requested for the 12th of May, but unfortunately nothing has so far come to fruition. So
David, I have got an update. I have chased some of these further myself, because again, and I've said to you before at previous meetings, no update is not acceptable really. So whilst recognising in the constraints of forcing people to give you an answer, I know the team have been very keen to try and get an answer. The issue around this, and again, let's be honest, this is showing some of the impact of COVID-19, where corporate business meetings that clearly were not operationally dependent, and obviously certainly organisationally in terms of timing around finance and everything else, except, and this is more around the finance, but it wasn't critical at that time, has not met. And ultimately, the update I've certainly had today is this conversation is still taking place with the chief finance officers, financial directors, in terms of the savings, particularly around the collaboration and what the planning is around recurrent savings as well. So it's not gone away. It's very much on the agenda. We have seen an underspend for the regional collaboration this year from the feedback we've got already. So we just need to get that consistency in how we're going to do it. I know that's being actioned, and again, it's a conversation that's been taken through the region. It's just not been updated in terms of what the answer actually is. Are we going to do it or not?
Okay. Thank you. Any other questions or queries on the progress report? Okay, thank you. Shall we then move on to agenda item 6, which is review of compliance with governance arrangements report, which I think is relatively self-explanatory. I was just wondering what happened regarding this banking issue. There isn't a lot of detail. Was it a glitch? Why did it happen? Which is mentioned on page 2 and page 3 of the actual agenda item 8.
Yeah. My understanding was that this was a sort of identifying the organisation incorrectly. So because it was coming from G4S on behalf of Lincolnshire Police, I think that on behalf of Lincolnshire Police bit got missed off, and so on a schedule it ended up being from G4S and therefore going into the wrong bank account. I don't know if Sharon or Gillian can say whether I've got it completely wrong or not. Or
Sorry, go on, Gillian.
That was pretty much it. The system at G4S cash collection centrally had the correct split, so it had the cash being collected for G4S from HQ going to their bank, and the cash being collected for Lincolnshire Police from HQ going to our bank. What was happening was when it was being transmitted to the driver system, for some reason it was telling the driver they were both going to the same bank. So that's why it took a bit of time to get to the bottom of it, because every time we rang the main system, as far as they could see, everything looked fine. But obviously we had to unpick it further to say, well, clearly when the driver sees it, it's not fine. So that was the ultimate reason why it was happening.
But it is resolved.
I'm sorry for being stupid. The driver system, is that physically a man, or is that, or a lady, or is that actually a system called driver? Sorry.
It's the system the drivers use. So the technology that the drivers are informed about their pickups and drop-offs.
Okay.
Was different. They had different data held in it to what the main central system was holding.
Gotcha. Understand. Thank you. And I take it that's been fixed now.
It has.
Thank you.
Any other questions on that? It's a fairly short report. Okay. Can we move then on to agenda item 9, which is a review of the two codes of corporate governance, both the PCC and for the force. If I'm reading it correctly, I don't think anything specifically has changed. And I'm curious as to why it says annotated copies, because I wasn't sure what was being annotated in those two copies. I don't know if anyone can enlighten me in that regard.
The annotation just means that the behaviours within the code and the sources of evidence have been listed. That's what it means.
Okay.
So there's a direct read across between the behaviours required and where that's evidenced within the processes that sit behind the code.
Okay. Do any of my colleagues have any issues or questions, given that they are, I think, essentially the same documents that we would have seen a year or so ago?
Chair, if I may.
Yes, Ian.
I guess really I'm looking at this and saying, right, how do we step this on in terms of making it a useful document that people can look at and go, do you know what, I get that, that's absolutely fine in terms of the code of corporate governance. And I suppose, Aubrey, it's that challenge of when we look at just taking on page 3, the behaviours, when we then look at the sources of evidence, and I look at those, I don't get those as sources. Commitment to code of ethics isn't a source of evidence per se. That's people's either behavior. How do you demonstrate there's a commitment to the code of ethics, etc. So there's kind of different types of sources in there that would reinforce that behavior. So we're sitting here going, our staff, we expect them to have the highest level of integrity, public interest, all that sort of stuff. A commitment to code of ethics isn't a source. That's a statement. And so again, what I'm just trying to draw it out to say, actually, when we can point to something to say that's the behavior, and we know that because. So the code of ethics is a set of principles that we rely on and people are trained on and everything else. The code of ethics is the source. A commitment to it is almost a throwaway sentence. I'd rather have 2 or 3 sentences that are really meaningful that we can point to support that behavior, rather than, because again, it kind of loses it as you go through and you see commitment to code of ethics, as you go through all of this, and it's in a lot of places, it loses that punch to say, how do you know that's right? The code of ethics underpins a lot of things, and it's just trying to make that a really something that's tangible we can point to. I don't know if that makes sense. I don't think that's fair. But it needs to. There's a bit of a disconnect for me in how we just tie that up.
Yeah, I think the sources of evidence can be made more specific, if that would help in terms of understanding specifically how we're meeting those behaviours. Yes, that's something that we can do.
And I add something on that? Because my understanding of that is that there is an act of committing to the code of ethics. It's not a, it's not a given. So
yeah, I understand that, Julie. I think when I read that, though, when you read that, there's a commitment. I don't know who's committing to the code of ethics.
The PCC has to commit to it as part of taking office. And that's why it's evidence of.
I'm not disagreeing, Julie. What I think is, for me, when I read it like that, I don't get that at all.
Right. So we need to sort of say, and this happened on.
It's something that just rather than just repeat it, because again, it's the repetition, probably the sentence that goes, how do we, how can I put, this is the behavior that we want. Absolutely, the PCC committing to that code of ethics. This is everything that underpins us. In that code of ethics is this, 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 and this. And I'm committed to doing this, and this is how I commit it. But sources of evidence, the fact that the PCC, for me, that's not a source of evidence. I say, I'm happy to have that challenge with people. It's just a case of, it just looks like a list of things at the moment, not a source of evidence.
It's more about demonstrating, isn't it? No, I think it's about demonstrating. It clearly demonstrates the code. So, again, in terms of decision making, is it part of the policy and practice? Can you actually show that you're actually doing it? I think is probably your point.
Yeah, it's point to it. It's just point to it. I think it's right. There is the code of ethics, but there's almost a code. It's an intangible thing for people. People want to go, show me, because the behavior is an outcome. I don't know if that's fair, but again, I'll throw the challenge out there, see what you think.
Yeah, you see, I think the starting point is that somebody commits to a code of ethics and they say, this is how I'm going to behave. And then that cascades down because it affects the code of conduct. It is reflected, that code of ethics is reflected in the way we do induction. You know, so for me, those sources of evidence are, you know, it's like a cascade arrangement that overlaying it all is a particular code of ethics, and our decision-making processes are designed to comply with the code of ethics.
So again, Julia, I'm not disagreeing with you, and how you described that cascade, that thread that goes through, that's the important part for me, that we can show the linkage, and it doesn't, at the moment, it's a list.
Right, it's just, as you say, a list, and maybe it just needs to say how these things relate to each other.
Yeah, so we can, and as I say, taking Jason's comment, the fact is actually it is that interaction that goes, I can point to this because I can show you when you see this outcome, we can draw a line back to it that comes back to, and this is in line with our code of ethics, which supports that behavior. And that's perfect. But I just say, it just at the moment, it's either going to be there to be used or it's just a list, one of the two. Thank you.
Anyone else got any points on the two documents? Thank you then. Shall we move on into the audit section? That's the agenda item 10, which is a report on the review of the process for the 1920 accounts from the PCC and the Chief Constable's perspective. Do you want to say anything about this, Gillian? It's got your name on the
yeah, I'd probably just highlight, obviously it's quite a detailed report of reviewing 1819 and looking into 1920 final accounts process. I suppose the two key elements for me are the paragraph at 3.3, where the statutory deadlines have changed. So we're now looking at producing draft accounts by 31st of August latest, and looking to publish final audited accounts by the 30th of November. And then in response to that, paragraph 3.15, obviously setting out that we still aim to produce our accounts earlier and have things in good measure. That was all I was going to mention specifically.
Okay. I'm sure that one or two questions from us as a committee. Can I start by looking at paragraph 2.11, which is the issue regarding the pensions report from the actuary, and the fact that there seems to be an identified need to have a revised report, taking into account a couple of revised issues, which are bullet pointed in 2.11. That was in January, but it doesn't seem to be from the next paragraph that the actual work was commissioned till March, which is 2 months later. I just wondered, that surely must have contributed to the overall delay. And why was there a 2-month delay between identifying the need and then commissioning that work?
We had quite a number of telephone calls and conversations around the assumptions, obviously understanding what the real issues were, and we had a number of meetings scheduled, so it just took a bit of time to and fro in to see if we could actually work with what we had, or whether we did have to actually commission another report.
Okay. Similarly, there seems to be an issue about property valuations, and paragraph 3.7 talks about changing valuers or not changing valuers. Was there an issue with evaluation personnel used by the PCC in terms of the final accounts?
So we had an issue with the 1819 valuations in that we had to appoint a new valuer for 1 year, just to ensure that we met the closure of accounts deadlines. So obviously we'd had a valuer for 1718, a different valuer for 1819, and then because of going out to tender again, we had a different valuer. We'll have a different valuer again for 1920. So it's just recognising that you wouldn't normally have that turnover of valuers in a 3-year period, because normally you'd appoint ideally on a 5-year basis. So it's just recognising that different valuers will have different opinions and views on things, and that there is just that slight risk that you end up investing a lot more time and working through different figures from different perspectives of valuers.
But you were in a position where you had to change then?
Yes, I mean, we'd appointed for 17-18, which should have taken us through a few more years, but because of some issues that we had, we decided to cease that contract and obviously reappoint for a 1-year basis only, just to get us through the accounts. But now we have confidence that the ones we've appointed for 19-20 onwards will be more suitable.
Can I also just seek assurance as far as relationships accounts 19-20 are concerned? I know we have a workshop in about 2 weeks' time. Are we on track to have accounts to be scrutinised in 2 weeks' time?
Yes, absolutely.
Okay.
I'll be sending out the agenda for that meeting by the end of this week.
Okay, thank you. So colleagues, do you want to raise any issues on this report?
I just had one, Gillian. It was around the lessons learned session you had with EY. Has that resulted in any problems that are likely to be repeated this year, that there are hurdles that you feel that you can't get over?
I don't think we've identified any hurdles we can't get over. Obviously, we're aware of the efforts that EY have made to properly resource the audit team, and we've certainly got some stability in members of staff that we're currently dealing with. I think it was more on the side of getting used to new auditors, new ways of working. We understand that better now, and we can try and preempt and be a bit more proactive around getting things done a bit better from both sides, really, now that we know what's expected that was different to how we used to do things with the previous auditor.
Right, that's comforting. Thank you.
Can we ask the same question to Helen?
You can, yes.
Unless she's frozen. I have a horrible feeling she's frozen because her internet was not great.
Yeah, I think you're.
This is your chance to get away with it, Gillian. You got your side, and she can't answer back.
I am talking though.
Oh, okay, there we go.
Can you hear
Nearly
me
got away with it.
or not?
Sorry, you're not, Helen. You're not coming through very clear.
Okay, am I back?
Yes, you are.
Sorry,
It might be better to try and share. Just share audio only. If you share audio only.
My screen. Okay, is that better?
Could I make a suggestion? Actually, it might be even better just to phone in. Because I'd rather have audio on a phone than this, because if that's possible. Chair, if that's all right.
Yeah, well, if that's possible, yes.
I think a phone number was supplied with the invite. Is that correct?
John might be able to answer that.
There was no phone number with the invite.
Is that possible?
At this point,
impossible at this point. Sorry, John.
Yeah. Sorry. I think it will be impossible at this point, I'm afraid.
Next time for contingency, we'll have the plan B. That's fine.
Yeah.
It might be beneficial for Helen to leave and rejoin with audio only. That might solve the problem. We've had that before.
Do you want to try that, Helen, if you can hear? Just to leave the meeting and join with audio only. And clearly don't know if this is if Helen's able to hear now. Oh. Looks like she has heard. Just give her a moment, see if she comes back on audio.
Can I ask whether you can hear me now?
We can, yes.
I hear you now.
Excellent. Sorry. I've moved location, which is hopefully better Wi-Fi reception.
Okay.
My answer to the question that was being posed would be very similar to Gillian's. I think we've had some productive discussions between the management team at Lincolnshire and also the team that I've assembled to deliver the 1920 audit. The plans are in place for that to be delivered in a far more timely fashion this year than was the case last year. I do think we all need to be aware of the fact that it will be somewhat of a challenge this year, a new challenge in terms of delivering an audit in a remote fashion, and with some of the issues that, you know, COVID-19, etc., will present itself, but the plans are in place to deal with those.
Okay.
Chair, may I just make a comment if that's right? I guess, Helen, my point is that we've been on the journey with Julie and Sharon and Gillian and the teams, that they've come a huge way in terms of increasing and improving the quality of the sort of audit work that they've been doing. I'm currently doing my own group accounts. We're transitioning to IFRS. We've put a new accounting system in, and it is painful but very doable. And I guess from my point of view, I'm going to be a little bit protectionist over these guys. They've done a fantastic job in improving. I don't want us to see us go backwards again. And if we can get close to where they've been performing for the last few years, that would be great. Just in terms of the confidence from our side, I don't want them to be damaged again in the process. If we can, that'd be fantastic. Thank you. Sorry, I do look after you guys, really, honestly.
Thank you.
Any more questions then on that item? Okay, can we then move on to Helen's report, the ISA 260 on those charged with governance in respect of the 1819 financial statements audit. Do you want to say anything by way of introduction, Helen?
Yes, Chair, if I may. So the status of the 1819 audit is that the audit procedures are substantially complete. The reason I describe them as substantially complete is that you'll probably all be aware that until a set of accounts are approved for issue by the organisation and the audit opinion is signed, any event that transpire, particularly if they're of significance, need to be thought about as terms of whether they have any impact on those accounts which remain open. And obviously we've had COVID-19 as an issue that's arisen in that post-balance sheet period. So we are currently working through with the management team the disclosures that will need to be made in the 1819 accounts with regards to COVID-19 as what's termed a non-adjusting post-balance sheet event. And we also need to now consider going concern of the Chief Constable and the Police and Crime Commissioner in light of the new information that COVID-19 brings around cost pressures, income streams, etc. So that work is just ongoing at the moment. I'm hoping it won't take too long to conclude. But as you will appreciate, there is the process that I need to go through internally with Neil, the engagement lead for this year, to ensure that our opinion in regard to the going concern and the post-balance sheet events review is robust. So that's taking place just now. So everything in the report, as you will have read, stands. I just want to alert you to the fact that that element is still ongoing. I'm happy to just point you through the key, what I see as the key elements of this report, because I realise it's a long document with a lot in it. Just at a very high level canter through, page 9 onwards of the report reflects back on what the significant risks were as identified in our audit plan when that was presented to the committee, you know, what feels like a very long time ago now, and the conclusions that we've drawn as a result of the work that's been performed to examine those risks. The misstatements due to fraud and error risk, which is on page 9, is effectively looking at the risk of management override of controls. That's a risk that's identified on every audit. It's not specific to the Lincolnshire Police. And the type of procedures that we perform in response to that risk are looking at journal entries that are made by the organisation, looking at particularly significant unusual transactions, and we found nothing to indicate evidence of material management bias in the accounts. On page 10, the second significant risk that we identified was regarding inappropriate capitalisation of expenditure, and this is effectively the risk that spend is deferred to future years by popping it on the balance sheet. Again, we didn't find any concerns as a result of the testing that we performed to indicate that that risk had in fact presented itself. On page 11, we feedback on the significant risk we identified around the valuation of land and buildings. The identification of that as a significant risk was triggered, to Gillian's point earlier, by the change in valuer for 1819. A change in valuer can often mean that the assumptions underlying the values applied to assets can change quite significantly, having a large impact and valuation swings in terms of what goes on the balance sheet. We engaged our specialists in the EY real estate team to have a look in detail at the valuations that your valuers had prepared for a sample of 9 particular assets. And we were able to conclude overall that we were happy with the valuations as they've been presented in the financial statements. There were other areas of focus in the audit which didn't meet what we would call a significant risk, but nevertheless are worthy of raising with you today. One of which was the pension fund liabilities, which is discussed on page 12 of the report. So the police participate in 2 pension schemes broadly, the local government pension scheme and the police pension scheme. There were matters to bring your attention in respect to both of those schemes. So the local government pension scheme, a prior period adjustment was made to the accounts to reflect the split effectively of costs between the PCC and the CC with regards to G4S members which participate in that scheme, and marrying up the allocation of costs to where the contract sits. So that was posted as a prior period adjustment, and we performed procedures around the calculation of and the posting of that adjustment, and we're happy with the outcome. The second is with regards to the police pension scheme, and specifically the impact of the MacLeod Sergeant judgment, which was given out last year, which effectively was a judgment based on the age discrimination that are believed to have been impacting the scheme from some years before, and reflected in a large past service cost for both, well, for Lincolnshire Police and the vast majority of pension schemes. Given the size of that adjustment, we decided to use our actuarial specialists in-house to provide us some audit assurance around that number. And the result was that there was effectively a disagreement in the way that the particular specifics of the Lincolnshire scheme in terms of the membership profile and salary increase assumptions were being reflected by the actuary. And again, as Gillian mentioned earlier, that resulted in a revised actuarial report being produced and the numbers in the financial statements being amended accordingly. I then would just skip you over to page 18 and the few pages that follow, which set out the adjustments that have been made to the account since the draft versions that were published 31st of May, in line with the draft publication deadline. And the vast majority of these differences, all of which are immaterial in terms of the accounts as a whole, arose from our audit approach, which involves sample testing transactions. And where we sample test transactions, if we find an error in the transaction, the approach that we take is then to extrapolate that error to give us an understanding of what the rate of error in the total population we're trying to test is likely to be, and therefore whether we think actually that balance is likely to contain a material error or not. So consequentially, the numbers that we document here are an estimation in terms of that extrapolation process. So I would agree with management that it wouldn't be appropriate to post these. They're just to give an indication of the size of error that might be present given the sample testing approach that we followed. I would then, that's our value from that's our financial statement true and fair opinion. Of course, there's two elements to the conclusions that we draw, and the second is the value for money area. And page 23 onwards of the report talks you through the value for money work and conclusions we've drawn. The headline summary is that we don't propose any modification to our audit opinion in respect of value for money, so it would be a clean opinion, to use that phrase. There were two risks we identified at the planning stage. One was effectively around financial resilience of the organisation, and the other one was in respect of staff appointments and payments. And whilst we've made some recommendations of things that the PCC might wish to consider in those two cases, we don't feel that it would be appropriate for us to in any way modify our value for money conclusion. The only other things I would point out in terms of this report is you'll notice that I've included in here a draft audit opinion and a draft management representation letter. Because of the matters I talked about before in terms of COVID-19, going concern considerations, etc., those two documents will need to be updated potentially to reflect the situations as they exist at the point of signing. So just to make you aware that the final wording in both of those two documents may need to change, but we will obviously be in touch with management around that, and they will inform the committee. And at that point, I think I would just open it up for questions, Chair, if that's okay with you.
Thank you for that. I think Neil's joining us. I've just seen a new face down in the corner of the screen there. So colleagues, have you any questions for Helen or indeed for Neil who's joined us?
Yes, can I just go back to page 11 and I realise there's questions actually about the current year, but you explained that because of the change in values, you felt it's appropriate to do a sample of the valuations that they've done on mine assets. Given again there's been a change in value, do you envisage having to do a further sampling on new valuations, or would it only be if there's a significant change in the valuations that are produced?
So we will always sample assets to test for valuation. The main distinguisher is whether or not we feel that we need to use EY Real Estates in doing that, or whether we have enough knowledge within the core audit team without needing to go to a valuation specialist. So either because we've used the valuation specialist in the previous year, the authority's valuer hasn't changed, and therefore we can take the learning from that and apply it to the current year. A change of valuer typically means we need to get our EY Real Estate colleagues involved, because we won't have the understanding of the methods that the new valuer is using, how they're documenting their assumptions, etc. We don't have that learning to draw upon.
Okay, thank you.
Perhaps I just ask a couple of questions. And some of these may be more for management necessarily than for the external auditor. But on page 5, the start of the executive summary, down at the bottom of that page, there's a couple of bullet points, which were issues that resulted in external audit work having to do more substantive audit work to do with analytical tools on payroll accounts and some issues regarding balance sheet accounts. Has that position improved for the new year's audit that will be starting soon, or are you still in the same position with having to do extra substantive work because of those issues for 1920?
Is that question directed at me, Chair?
Well, whoever can answer it, really.
I can certainly give you my perspective, yes. So we've spent, as part of the discussions that Gillian was referring to earlier, we've spent quite some time talking to management and also talking to the more detailed financial account staff about how best to prepare the information in a format which we need in order to be able to effectively sample the transaction. So I am confident that working together, we should be able to improve that process in 1920.
Okay, thank you. And my other question relates a couple of pages on, page 7, where you talk about, and you've probably hinted at this, talking about the need for some assurance to be given about the COVID-19 and its impact on the financial statements and all that. Are you saying you expect that assurance to be given to you through the letters of representation?
So at the point of drafting this report, where we were at was we were waiting to see management's assessment of what the expenditure has been to date with regards to COVID-19 and what the anticipation was for that expenditure looking out in the going concern period, which is 12 months hence, and also any additional income that they anticipated receiving. So there was that element of it, which we've now received, and I've worked through that. As part of our internal risk management process, I need to submit that and a package of information actually to our central team for them to review the wording in our audit opinion, which will, this is subject to going through that process, but my anticipation is that the audit report will contain an emphasis of matter paragraph that refers to your own increased disclosure about the going concern and the impact of COVID-19.
Thank you. Because my main question was, has it happened? Have you been given that information? And you have.
Yes,
so
yes.
Deals with that. Okay. Any other questions?
Yeah, for me.
There you go. Ian.
Thank you. Apart from the fact that I'm not going to have an interesting heated debate about how you guys do extrapolation going through my own group accounts exercise at this moment in time, I'll keep those battle scars to one side. On the COVID bit, explicitly just a case of sharing my experiences at this moment in time. Audit firms are finding it very, very hard to understand necessarily what they need to put in. An emphasis of matter, I totally understand. You do actually have to help the users understand what that actually means as well, because they're not usually used to seeing this. And even if you provide a really good basis, sensitivity analysis, etc., is it going through a technical review, or is just your review between you guys all that it's going to go through? Because the technical reviews are coming out with what I would consider disproportionate requirements about doing testing, which delay things if you're not careful.
So the answer to your question is it is going through a technical review.
Okay.
I can't predict what sort of questions they're going to come back. So I'll just say that. However, we're just concluding our NHS cycle now for audit opinion. So I have got some experience of putting those opinions through this consultation process and going through the rigor of justifying going concern in that context as well, which is strange given a time when every time you turn on the television, some politician is telling you how they support the NHS. So I get your point entirely, and trying to apply as much pragmatism to the process as possible.
Thank you, because some of the assertions that are being requested are wholly impossible to do. And obviously the growl back at Neil, because he would not be an audit committee if I didn't have a growl at Neil. Obviously a lot of the effort and the issues that we have are, had these been signed on time, this even wouldn't be a conversation, because effectively we'd be looking at this year's and that disclosure would not be required.
Yeah. So is it worth me just saying a few words? I'm sorry I'm joined and late. Thank you, Helen, for taking the committee through the audit results report, and obviously at the point I'll still be signing on behalf of EY for the 18-19 financially. I don't wish to elaborate any more than what Helen's already taken you through. I think there was just two comments I was going to make, which is the first is, as Ian's already just alluded to, I wanted to acknowledge again, and it is in writing in our report, the consequences of our resourcing constraints and the impact that has had on the Police and Crime Commissioner and the Chief Constable's office and the finance team. I know I've been through this committee a couple of times now to explain that position and the consequences, but I think I need to, especially this is my last meeting, to acknowledge that impact again and to apologise on behalf of EY for the impact that had on certainly the vast majority of the audit that took place pre-Christmas. And I think Helen has set out what's happened since Christmas and the position of where we reach now. And Ian, I would agree with you, had the audit been concluded earlier, we wouldn't be having this position around COVID-19. Unfortunately, the reality is that is where we are. I think all I would say in addition to what Helen has said is that I've been going through an exercise to lead on behalf of the firm, the link with our professional practice team about the basis on which financial statements are being prepared in local government, police and fire entities, what our expectations are about the level of documented consideration we need from management, the sort of questions that we need to be asking to form a view on whether any material uncertainty does exist at the point at which the accounts are authorised for issue, and that judgment as to whether or not there's an emphasis of matter, whether you can rebut an emphasis of matter, and where you think there might be a heightened risk of a material uncertainty. I agree with Helen that not all of that pre-work before these consultations have gone in, I'm hoping would make a difference, but I still anticipate that Helen and I will get some questions through our technical and professional process about the work that we've done, but we're wanting to make sure that's expedited as quickly as possible and enable me to then issue the audit opinion.
I would also say as well that obviously we will need to go through a going concern assessment for the 1920 financial statements, and COVID-19 will also be a big factor in that. So in actual fact, there is some saving grace in the sense that a lot of the work we're doing now will be used in the 1920 assessment as well.
Yeah, that's very
We only have to roll it forward 4 weeks effectively in total.
You get my point.
I do.
Yeah, and thank you, Neil, in particular for the apology, which we note, and thank you for that. Any further questions on the ISA report, ISA 260? Perhaps just one final one from me, which is on the thorny issue of fees, where I see it is mentioned towards the end of the report that there's the likelihood of additional fees. Is there any idea at the moment in terms of quantum? Do you have to agree that with the client? And I know it has to go through PSAA, but I just wonder what the current position there was on fees.
So I'll take the position for 1819. I think we are at a stage now where, with working with Helen, we need to work through with Julie and Sharon where we think there has been legitimate changes in the scope of the audit work that we've needed to undertake, how we've responded to audit risks that are outside the assumptions in the scale fee, and run through those assumptions and our level of audit procedures with the CFOs for their response. As you said, David, the PSAA need to determine a fee variation, whether it's agreed or not by management, and we'll be putting through what we think is a reasonable fee to reflect the additional work that we've needed to undertake. But what I would like to do, though, is to be very clear what the total costs are involved in delivering the audit and make it very explicit about the fact that we're not passing on to the PCC and CC any implications around the delays that resulted from our resourcing position, and indeed where we've experienced inefficiencies even when we did have resources and where we've needed to reperform work. That shouldn't be passed on, obviously, rightly so, to yourselves too. And I think it's important that the CFO see the total costs that have gone into the audit so they can see the context in which we're asking for additional fees. And that's the position for 1819. Perhaps I'll let Helen talk about what exercise we need to go through from 1920 onwards if she's not already done so with this committee, but there was something slightly different moving forward, but that is the position for 1819.
Thank you for that, Neil, because that really was my question, that you aren't going to load on any of the additional costs that you are incurring onto these fees. They will be genuine additional
genuinely costs. Yeah.
No, that's fine. Thank you for that. Okay.
Yeah, if I may. Oh, sorry.
Ian, yeah.
No, I was just going to say, and I'd probably give my steer to the business. I appreciate there's going to be, Neil, with the best in the world, there's going to be an overarching EY approach to this necessarily, which may not be consistent with necessarily how you personally would approach the fee conversation. So I'm going to give you a get out in a very rare moment. I'm allowing you the get out clause. What I would encourage the business to have a think about is where you've incurred what I would call inefficiencies because of the audit team. If you've got particular situations, because Deloitte's are my current auditors and they just love it when I do this, where we've had to go back and we've had to duplicate work, where we've had to go back, where we've had to explain it. So when the overrun usual schedule arrives, I'm in a position to rebut it, because as much as you might want to say, Neil, they're not going to approach it that way, they may well do so. I think it's, even if it's just a quick exercise, just have that in your armory. Should they go back and say, well, actually, we think this is legit overruns, it's always helpful to have that as a discussion point.
Thank you, Ian. Are we finished then with the ISA 260? Okay. Can we move on then to agenda item 12, which is the External Audit's annual letter, which I think in essence reflects much of the content that we've just been through in the ISA 260. It certainly seems to me. I don't know if you want to say anything.
Well, I was just really going to reiterate what you just said, Chair. The annual audit letter is a regulatory requirement. We have to produce one at the conclusion of the audit. We can't do that until we physically sign the audit opinion, which is why it's only sitting in the papers here in draft. And it really just is a slimmed down version of the ISA 260. There's no new content in that report, and you wouldn't expect there to be.
No, I wouldn't. No. So on that basis, do any of my colleagues have any issues, given that it simply reproduces what we've just been discussing? Right, okay. We can agree that then and move on to agenda item 13, which are, grabbing the separate pack, is the statement of accounts for 18-19, including from both PCC and the Chief Constable, and includes the annual governance letters and the draft letters of representation. So do any, again, content-wise, we've seen these before, very long time ago, probably 13, 14 months ago in draft. Do any of my colleagues have any questions as to the detail in the statements, or in whether the financial statements or the governance statements?
Yeah, for me.
Okay, Ian.
It's just literally one on the PBSE element. I just want to check. There's a statement on there that second paragraph, last one, effectively meant that a lot of businesses became unable to carry on. Many employees were furloughed on 80% of their existing salaries. Presumably, we just need to put the word capped in there because obviously it wasn't 80% of everything. Sorry to be pedantic, but as you can see, there's a few battle scars I've had over the last few months dealing with my lot.
Okay, thank you for that. Can I just mention, and these are quite detailed little points.
Sorry, I'm not sure what you're referring to. Which page is this? You're on mute, Ian.
Ian, yeah.
Sorry, it was the loose piece of paper, note 26. I got a separate piece of paper.
What is that? I don't know what that piece of paper's for.
Oh, it says, don't know. I've just got a piece of paper saying post balance sheet events that's loose.
Well, because at page 116, we've got the note that relates to post-balance sheet events.
No, this is, I think, in the Chief Constable statement.
Oh, right.
So
right, yeah, sorry, Julie.
It would have been page 69, I think. It's note 26.
Right. I was going to say, I didn't recognise that because in the PCCs, it's drafted differently.
Sorry, my bad. Yeah, it did come out the other day with the actual document. This agenda item 13 pack. Garen's potential wording or something from her team. Can I just point out a couple of things, minor things, in the PCC statement on page 14, paragraph 6.2. I don't know if there's any significance, but that paragraph appears in italics. Don't know if there's any, whether it's just a typing issue or whether it's any significance as to why it appears in italics, which is to do with the joint assurance map. Paragraph 6.2, page 14, 15.
I've got no idea why it's in italics.
Actually, just start to go. The first few words are.
Yeah. Okay. I think it must just be, unless Aubrey can illuminate. For me, it's
It's just just an italic. Okay. Yeah. I wasn't asleep when I got to on page 32. There's a pie chart about capital financing. You can get there. The big block on borrowing isn't labelled as borrowing. It's labelled as capital receipts, duplicating one of the narratives elsewhere in the chart. So it's a simple labelling error on the pie chart.
I need to amend that. Yeah, thank you.
So I did read them.
Yeah.
Otherwise, I don't think I have any more issues. Although I was going to ask whether EY was satisfied about the COVID statements, but we've covered that and it's been dealt with elsewhere, so I don't need to cover that again.
Could I just raise on page 22, sorry, 42? I wondered whether it would be appropriate to have a note. This is on the income and expenditure statement. we've got the Chief Constable expenditure going up from 115 million to 178. I mean, that's around pension, I think. Would it actually be appropriate to have a note at the bottom, or even a cross-reference, a little bit of explanation as to, well, I mean, even the top line, the PCC is down from 40 to 33, and the Chief Constable up from 115 to 178 million. I think it'd be helpful for the reader to have some clues to what's going on there.
Don't know if that would appear in the notes anyway, anything like that. I've not cross-checked.
No, and they probably ought to, because the whole idea is that column headed notes takes people to.
Oh yeah, there is. Yeah.
Yeah. Yeah. So what we might do is look and see, and make sure there's an appropriate explanation of that.
Okay, no, that'd be helpful.
Yeah.
Thank you.
Okay. Anything else then on the statement of accounts?
Well, just one further one on the Chief Constables. On page 24, it talks about the 1, 2, 3, 4, 5 paragraphs down about a 5 million contribution from reserves. Just wanted confirmation that that's, Sharon, is it 5 million? Because I think I read somewhere else at a figure of 3.1 million.
Sorry, where are you looking? Page 20?
This is page 24.
Yeah.
5th paragraph.
In the introduction.
It says 5 million contribution from reserves.
It was 5 million in 1819.
Right.
But was that the budget, Sharon, rather than the actual
figure? Yeah, it was budgeted, and then we didn't need to make such a large contribution in the end.
Right. Could you make that just slightly clearer? Because I think the contribution I think was 3.1. Is that right?
Yes, it was. But it does refer to the budget figure, because it was 5068. I remember the exact figure, but we came in lower than that. You're quite right. So we'll put it as the budgeted figure.
So page 33 in the PCC's accounts has got a table at the top that sets it all out.
Yeah.
That's fine, thanks.
It was, yeah.
Chair, may I have one more question for me? Julie, just on page 28 on the pay gap information, whilst we're not as bad as everybody else element, coming back, we're 6% lower. Do we have, in terms of prior year, is this a good news story or not? And is there an opportunity therefore to have a look at prior years? If it's not, then I'm not so worried. I won't ask the question. On page 28.
Is this
I'm
the
just
first
wondering.
year? Is this our second year of publication?
I just had it in my head. It may be me getting confused. I just thought this was our second year. I'm sorry if I've got that wrong.
It may be. I'm looking for Gillian or Sharon's assistant. Is this our second year of publication?
I don't necessarily need the answer now, but my question would be is if it's a story, if we got prior year, it might be something we want to tease out a bit more.
Well, we'll bear that in mind for the 1920 account.
Exactly, when you produce that in a few weeks' time. Yeah, exactly. That's fine. Thank you.
Okay, are we finished with the financial statements then? Okay. Thank you. Shall we move on then to item 14, actuarial assumptions. Lot of paper, lot of technical paper that one day in the dim and distant past I would have understood, but struggle to understand quite a bit of it these days, which is very telling on me personally, I have to say. I must be getting old. Have colleagues got any questions? I mean, we need to look at this because it is going to form the underlying basis of the pension calculations that are going to the financial statements. Do colleagues have any specific questions in terms of the documentation from the actuary that's been produced in the way of various briefing notes?
Chair, if I may, rather than a question, because that really would have been losing the will to live going through this one, but more of a request. I think it would be helpful, and I guess perhaps this is a steer to John and the whole business. If we've got something that's really quite as intense, quite heavy as something like this, some way of, and this is a comment that Tracy was making earlier, was just providing something that allows us to, see it, ingest it, not hit it head on. Because if you've got to have, if it's a cold read of that, that requires a very dark room with a very wet towel over your head. Which, to make it accessible for us, I think people could do something for us. If we could have a look at that, that would be great. Because that's, yes, we will look at it, we'll go through it, but just making it just a little bit more accessible would be great. Someone just give us a 10-15 minute briefing. What do we need to worry about? And it doesn't necessarily need to be a member of the force or PCC.
Yeah, and to pick up on that, I agree with that, Ian. Somewhere in one of the briefing notes, because they're not sequentially page numbers within papers, it's difficult to point it out to you. But the actuary poses a question: which of three options are you going to use in terms of your McLeod data valuations? Which of the three are you going to choose? And then there's another couple of options to do with additional calculations, added costs. Use of estimated investment returns. What basis are you going to use? It might have been useful if it was pointed out to us that those were two key decisions, and this wasn't the decision we've decided to make. I presume we're making decisions that are consistent with the position we got to on McLeod and Sargent for the accounts we've just approved. I presume we're being consistent between the years. I don't know if anyone can answer that.
I think so, except where things have moved on.
Oh yeah, obviously.
Yeah.
Okay. But yeah, I think in future for this sort of issue, as Ian said, if someone could just pull out the key issues and these are the decisions we're taking, I think that would be much more useful for us and give us less of a headache potentially in trying.
A one-page bullet-pointed piece of A4 would be really useful.
Yeah, I mean, I absolutely take the point. And of course, again, the timing on this is impacted by the fact that we're still working on 18-19 accounts. And for me, it'd be much better to get this to you sooner rather than later. I mean, it's getting that balance right, because we don't want to instruct the actuary too early, because then if things change, we need to instruct them again.
Yes.
And you know, so it's just weighing up those timescales really. But in order for you to be better informed, we just need to take a step back really and look at how we're doing that.
Okay.
Think about the key issues and the key ways that assurance is gained by us just on one page, and then we can, rather than having to go through it all and look for things, we'll then say, oh yes, I see that. You can go to that particular point and have a look. It just makes it a lot easier when you don't have to sit down with hours on end.
Yeah.
Okay, thank you. So are we content with this report then? Any further questions?
Yeah, can I just raise a question? I hesitate to raise it as well. Bearing in mind the discussion we've just been having previously about the impact of COVID, things like the mortality rate, which is, appears to be hitting the elderly people, life expectancies are all changing. Are we likely to enter any problems in this sort of area where, as new data keeps coming out about what's happening with COVID, we might end ourselves up in a loop where we never actually get to a conclusion about what the appropriate liabilities are to disclose?
I think that's absolutely right, Jim, and that's why really, time is of the essence in all of this, isn't it? And we'll have to. It's one of the reasons why we've wanted to stick to the timetable for getting the accounts produced rather than going on till November, because the world keeps changing, and there is a risk around this that the actuaries will come up with a report that doesn't reflect the here and now.
And the danger then might be the auditors say, well, it doesn't, and we go back
Yeah.
for another version,
Yeah.
and then loop around and round again. I mean, if we had,
which is what happened with the 1819 accounts with MacLeod, of course, because MacLeod moved on. If we'd got our accounts signed off in the timescale that we originally planned, the MacLeod stuff wouldn't have impacted.
I think if this becomes a real risk, we need to think how we can actually cut through the Gordian knot. And the way in which the accounts are kept for the police is based upon national requirements. The national requirements could be changed. So many things have changed because of COVID. They just cut it through and say you can base it on your assumption about life expectancy as at the 31st. And if subsequent events like COVID alter those, you don't have to reflect them in the evaluations. So it is possible for the rules to actually be changed unilaterally within the public sector in the UK.
Right.
I mean, we've got to think what our priorities are, you know, in terms of the country. And does the average taxpayer want to spend money on engaging more and more consultants with actuarial reports, or would they rather get on with real life and understand what the real impact of COVID has been on the economy?
Well, what happened when COVID, started, lockdown started, CIPFA started working with people in government and so on, and the proposal was going to be that the set of accounts was going to be about half a dozen pages. I mean, I exaggerate to make the point, but it was really about, in this year, given COVID, we're all going to produce a really slimmed down set of accounts. And they had to abandon, the people who were working on it just abandoned it, not because they got absolutely nowhere with the profession and, all the stakeholders. Nobody's prepared to give any ground on it. So, whilst I absolutely share your sentiment, as a sort of, I suppose I'm being a bit of a realist. I just, unless we have something significant happened, even more significant than COVID, I find it hard to see that you'll get the sort of agreement.
There was
Don't want to be defeatist.
People who liked the slimmed down version, it would have stuck.
Yeah. I mean, I share your pessimism, but things like the IFRS relation to leasing's been put back a year. I think relatively small modifications, if they were going to result in everyone's accounts being delayed ad infinitum, I think there would be a greater chance of actually getting some movement nationally. So it's just something to bear in mind if we end up in that horrible loop.
And I'm not really sure now how we feed that in. I mean, maybe we feed it into CIPFA. Maybe that's the route. I don't know if Neil and Helen are still online, because they look to me, I can't see anything, but again, because there might be an opportunity for that to be fed in through the audit firms. I don't know whether you were listening to Jim's suggestion there.
Yes, we were. I think there's a number of reviews happening at the moment. There's the Tony Redmond review into the sustainability of local government financial reporting and external audit, and I think Redmond's due to report in the autumn, but there's, I suppose, still an opportunity through stakeholder groups and through the engagement with the audit firms about what we think the shape of those recommendations should look like. And whilst it's geared to local government, that I think it's still applicable for police entities. CIPFA have been for a while now undertaking a work programme about the streamlining of financial statements, and have consulted and opened up discussion papers about what the future framework for financial reporting should look like. And Julie, you're right, in response to COVID-19 there were emerging some radical proposals to try and limit the implications on financial reporting for this year. We weren't at EY, we weren't part of those final decisions that were taken through the relevant professional bodies, but from what I heard, those proposals were extremely radical and probably would have gone against all recognised professional standards, and might have actually caused a bigger problem to recreate that position into the next financial year. So things like particularly group accounting, the valuations, actually, whilst it might have solved a problem temporarily, it might have caused a bigger headache actually to try and then produce those statements and then do the comparators in the following year. So the cost and benefit didn't work, and I would agree with the comment that James has made about the deferral of IFRS 16. I think that is a positive move, and MHCLG have taken a stance to relax the timetables to allow a bit more time for preparers of the accounts and auditors to get through this year, but without delaying it unnecessarily. I think it is probably one for Helen to pick up with you as your engagement lead for 1920, but the areas we'll be spending a bit more time thinking through will be what your valuer is saying on the year-end position on the valuation of your assets and what is being expressed in relation to COVID-19, but equally what assurances we get from the pension fund auditor and how that's looking at the volatility of the pension fund assets at the point at which the accounts are authorised for issue and the audit report, and other areas like impairment of receivables, going concern, of which we're doing quite a lot of the legwork on that now to close 18-19. Obviously, we'll work with you to try and be as proportionate as possible in dealing with some of those technical and professional challenges, but it ultimately is a cost and benefit about how much you stop and defer and pick all this up again next year, which could be an even bigger challenge actually.
Thank you for that, Neil. Have we finished then on the actuarial item? Okay, thank you. Moving on to another technical area, Treasury Management, and we have the Treasury Management Strategy Statement for 2021, which now comes to us. Started, I think, last year. Come to us for comment and review prior to, well, it's obviously being implemented anyway. Does anyone, any from the officer side, want to say anything by way of introduction?
I think it's self-explanatory, really. I mean, obviously, it's approved as part of the budget, and it's one of the supporting strategies for the budget, and it's something that the team needs in place because it's our Bible, really. It's our handbook, you know, for how we deal with the Treasury during the year.
And we'll obviously be getting a half-yearly report in the autumn, in September, October.
Yes.
Progress. Yeah. Now, I think as some of the officers are aware, Jim helpfully sent in half a dozen or so questions a couple of days ago, which were relatively technical, relatively detailed. I don't know whether we want to deal with those now. I think, Jim, you'd be happy if those were dealt with offline in terms of actual answers, if that's correct, Jim, is that?
Yes, I think so. I mean, I think the strategy itself is correct. What the officers is doing on the day-to-day basis, right? It's just perhaps whether the articulation of that could actually be improved in the document. So that there's, for example, I'll pick one of them up. It talks about changes in rates, which have to be factored in. But one of the biggest things that happened last year was the government changing the margin on PWLB. And that's not reflected as a consideration going forward. And we don't know, for example, what may happen with the economy and what the government may decide to do. It might decide, for example, it wants to promote investment by public bodies and cut the margin, which would affect our strategies on borrowing, for example. So I just think there's wordings that could potentially be changed within this to actually guide the application in the future. And I've suggested a number in an email which I sent through. But given this is just a draft, I mean, perhaps the best way forward is for the officers to actually consider those and any other observations people have got.
Julie? Yeah, it's okay. Speak, Julie.
No, I think I'll let Sharon go first.
Okay.
Yes. I've gone through Jim's comments, and most of them are, as you say, it's about greater explanation. It's not so much how we're operating the strategy. It's about being clearer around the narrative as to why we're doing what we're doing, and more than happy to incorporate greater degree of narrative explanation next time round when we come to do this. I think there were 1 or 2 questions in there, and I've already got responses, and we'll send them through and circulate them to the members separately, because there are quite a number of those, but happy to respond.
Okay. I think from my perspective, one of the questions Jim came up with that I was going to ask anyway was to do with the table on page 11, table 3.1, where there seems to be quite an increase in the total Treasury investments from the actual 18-19 to the point in time in December. It's not just doubled, but there also seems to be a switch. I don't know whether it's an issue away from money market funds into banks. I don't know.
I can answer that. It's basically the cyclical nature of our cash flow. It's not as steady as within a local authority. What happens is we get the big injection of cash in July, which is the pension top up, and then as the year goes on, the cash decreases. So at year end, we're typically at one of our lowest levels. So what you're seeing at December, the difference between December and year end, that's what we would expect, and we would observe that within each 12-month period. So that's why it looks. And when we invest, we always invest with that in mind, and we only commit to fixed term over the cash rich months, because we know we're going to manage it through money market funds when we get to the lower cash balances towards the end of the financial year.
Does that situation influence the fact that you don't allow non-specified investments over a year? Is that what's driving that?
Absolutely, because you wouldn't want tying up cash longer term, as you can do with the local authority, is very difficult because the nature of the cash flow, it is cyclical. I mean, at some points in the year, you do dip into negative working capital before we get that reimbursement back, which of course, you know, is fairly unusual to the police.
Yeah. And it would indicate to me that you were borrowing in advance of need.
Mm.
Yeah. Any colleagues, any other questions on the strategy? Obviously, we'll get a separate response to the Jim's detail question.
I mean, just to be clear, this is the strategy.
Yeah.
You know, that it's because it's in place.
Yes.
Because we're in the year.
So
in future, we would aim to bring it to you before the start of.
Oh yeah, no.
The year,
yeah. The January meeting would be the obvious one. Yeah.
Yeah. Sorry, Julie, can I just pick up on that? The covering paper calls it a draft strategy in paragraph 2, A2.
Yes. Well, it may do. I'm not sure actually that it's had the formal decision yet. Is that right?
That's right. That's why it's highlighted as a draft, because it hasn't had the PCC decision on it yet.
Yeah, so we are late with that, but of course it is the strategy that we're following because we are in the 2021 year. Yeah. We shouldn't be late like this. I mean, COVID, it's one of the things that COVID has done is delayed this sort of thing, frankly.
Any other questions on that one? What I propose to do there is take the next item and then maybe have a 5-minute break before we move on to the final 6 or 7 items. So the next item is the finance review, which is a topic we had on the agenda at a previous meeting this year in January. And if I'm reading this correct, what we've got here is simply an updated version of the report from SIPFA, but yet to have any work done in terms of completing the action plan. Is that correct?
I think that's correct, yes.
Were there any, because I didn't go back and check to the original version of the report, are there any material changes in that report?
I don't think there's material change. I just think it's a bit of a difference in emphasis. It's you know, it's following our feedback. Yeah. And I mean, I can't say that I've checked it back to the original report because I've just sort of concentrated on what we've received now.
Yeah. I was going to say exactly the same thing as Julie. We gave some feedback about some of the comments, about the emphasis, just clarifying issues, and this final version reflects that.
And the intention is, therefore, that the action plan will be produced, and
Yeah.
we as JIAC will kind of see progress reports against that. Is that correct?
Yes.
I mean, we've got an improvement plan, a draft improvement plan in the report. And what obviously we need to do is to assign owners for those actions and some timescale for it.
Yeah.
The paper suggests that additional resource may be required. Julie, has a decision been taken on that? And if so, what stage are you at recruiting somebody?
Well, I think one of the things that Sharon and Gillian and I are doing is reviewing the overall resourcing of the team, because, you know, obviously COVID has increased our workload, because when something like this happens, everybody wants financial reports, you know, so there's returns to the Home Office and so on. The whole police uplift programme is increased, you know, the 20,000 additional officers for policing nationally has increased our workload. We're working currently on the strategic partnership potential contract extension, and of course the fact that we've got 2 sets of accounts going on, and then we've got this review. So I think we have less than 4 FTE in the corporate team. So that's, you know, that's quite a workload for us to carry. And I think, Gillian, you've recently pulled out an old job description, haven't you, for when we tried to recruit previously, and we're looking at getting at least some temporary assistance in, even if only for a year or 2, just to get us through this period.
Okay, good.
Any questions from any of my other colleagues on this? Okay. Given that we've now been going just about 2 hours, shall we take 5 minutes and have a comfort break and come back about past? I think it's about 25 past according to me. Is that okay? Okay.
I just say, Chair, that the live stream will be continuing. So if participants want to turn off their video, just wanted to flag that up.
Okay, thank you. think we're just waiting for Jim. He was on a minute ago. Oh, I think we're all back then. I think I've seen that Neil Harris has left, which is fine because Neil's done his bit, as it were. So are we all ready to continue? If we are, then we're on agenda item 17, which is the PCC's risk register. Do you want to say anything about this, Aubrey?
Thank you, Chair. Nothing in particular I wanted to bring to the attention of the committee, other than to say in general, since the last review in January, there have been 3 risks which have been added to the register and 3 have been removed, and one which came and went in a relatively short period of time, which was the failure to prepare for COVID-19. I'm happy to take any questions or observations.
Just a quick pedantic observation for me to start with, because I'm good at those. In the narrative, the first new risk is called CO51, but in the actual table, in the actual register itself, it's CO52.
Ah, thank you for that.
So, I think it probably is 52, but you probably just need to check that. But on that, I was just wondering, and I don't know whether this is something for the foresight, what, or any side really, what is the actual, I was trying to get my head around what the failure, the nature of the failure of the force to prepare appropriate strategic and operational delivery plans actually meant in practice.
Shall I kick off on that?
Yeah.
Yeah. I mean, within the integrated scheme of governance, you know, the way that services are delivered and control is maintained, etc., is that we have a budget which sets out the financial plans, and in support of that are a number of strategies and delivery plans which give more information about you know, what is going to be delivered for that budget. And you know, the way it has operated up until 2 or 3 years ago is that, you know, the budget would be approved by the commissioner, and then the supporting delivery plans would be approved. And as I say, most recently, we haven't been in a position to do that second part of the equation. So we've had a budget, but we haven't had that sort of statement, if you like, of what it is that the budget is delivering.
Tracy, were you wanting to make a point?
Yeah, I just think that there's a potential risk that may not well be on there around not taking advantage of the potential cost savings, like I mentioned earlier, looked into as a result of COVID. So if we don't actually explore the money that we could save and the time we could save and the different ways of working, if we just go back to business as usual, I think that's a missed opportunity, and I think we should keep that on the horizon and make sure that we don't lose sight of the fact that new ways of working might be an opportunity as well as a risk.
I think I would, the comment I would make on that, Tracy, is that we do actually have a programme which has already kicked off, a project to look at a new operating model for the OPCC and the impact that COVID's had on how we've operated and how we've met statutory requirements. And then included in that obviously will be any particular savings in areas or indeed additional expenditure that needs to take place to meet the new operating model.
Yeah, it's not, I mean, it's not a negative thing. It's just a way of keeping your eye on the ball and thinking this is maybe somewhere where we could do something positive in future. So I'm sure everything's going to be met, and I don't think there's a risk in meeting your current requirements. I think it's just a pathway and avenue to be explored, as Jason explained earlier with this project. I just think that maybe the risk register is somewhere that you might want to, the risk of not taking advantage of these opportunities is potentially quite high. Might just want to think about. It's up to you. Thank you, Chair.
Thank you. Any?
Well, it could be broadened to a wider risk, and that's the risk of not learning lessons from COVID.
Yes, June. Yeah.
Any other questions or issues from my colleagues? Ian?
Yeah, for me, thank you. I guess really it's kind of tied into CO 36 and the Blue Light Programme and all things relating to property. Certainly the early sight of ours when we talk about property and shedding property, and the demand for commercial property is rapidly changing about what people want, what people need. You know, people are already given that sense of more than happy to work from home a bit more. You're looking at more of a hub and meeting space environment rather than the traditional space. So I guess it's more of a case of don't need the answer now, but I'd like to see that sort of thinking washing through, especially if we're trying to get rid of properties and everything else, and what impact that has on us trying to do stuff. So there's the physical bit, as well as Tracy said about some of the cost savings. We also have to be thinking about things that we assumed about what we would be doing with our people and locations. Has that changed?
Yeah, can I just come in there? Because obviously, again, it links into the renewal bit for us from the force perspective, and which, again, to be fair, links into the PCC, which conversation with the PCC jointly. Because obviously, we have got an estate strategy. It links into the risk that Julie's giving an update on earlier about making sure we've got clear plans of what we're doing in line with the wider governance arrangements that we've got with the force. But certainly in terms of the estate, part of the Horizons work that we're doing at the minute around the target operating model, how we want to deliver service, includes the estate strategy and everything else within that. The important bit there is recognising the learning from COVID-19. We're straight away recognising, and again, it's not just about the police, but the wider partnership. Actually, there is some opportunity, maybe not immediately, because again, we know very well there's a real challenge in terms of the immediacy issue. But over the next 3 to 5 years, actually, there is some opportunity there where, as part of the planning, we could look to exploit opportunities. We've got some things in train at the minute. Again, I won't go into the detail of it now, but there's some conversations taking place about how we increase capacity capability on the East Coast, on the east of the county, for all the right reasons, in sense of it's traditionally where we struggle to get resources that obviously because the majority live on the west or out just outside the county. And just as importantly, recognising we've got some significant demands there at times of the year, and particularly on serious and organised crime as well. So it is one that's we're very alert to, in sense of, look, we don't need to do this. And some of the learning not for today, I know we'll talk about COVID-19 later on, we've had quite a different approach from both the East and West commanders in terms of home working, including some operational staff. And that's been really interesting to see the impact that's had in terms of benefits and disbenefits.
Okay, thank you, Jason, for that. Anything else then on PCC risk register? Okay, then we move on then to agenda item 18, which is the assurance map, which I still think is a more of a template for what's about to be developed. Do you want to say anything about this, Aubrey?
Yeah, I'll just introduce the fact that there is a new template, and there's an example of how potentially it might be used. It's a revised approach with the use of the assurance map once it's populated in regular meetings between the Deputy Chief Constable and Chief Superintendents for each operational function. That's something that's going to be trialled. The main changes to the template are that there's a summary sheet which gives an at-a-glance snapshot of assurance. There's exception reporting of sources rather than, as used to happen, where we had sort of regular detailed updates, which was quite onerous. Additional functions have been added to the map. So ICT has been separated from information management, and professional standards has been added as a separate function. And as I've said, there is a rollout plan for the operational trial, which is attached as an appendix.
So is it likely that come our September meeting, we'll have a sort of full live version of this?
Yes, well, the hope is that it will go live across the organisation within the plan. It states there in the start of November.
Okay, all right, okay. All right. Any comments or questions?
Chair, so just from the force perspective. So firstly, I think my first meeting, only my first week, so it'd be 12 months last week, was obviously with the JIAC and the conversations regarding the assurance map, and again the debate then about separating, not single everything. So again, certainly from the force perspective, again linking into the work that Aubrey's done with the OPCC, we see some real benefit if we can take it into not just organisation but some of the operational areas as well. And part of the work we want to do is road testing it with the commands. So it's not just about the operational commands, it's also the enabling services commands. Again, ultimately in terms of performance management. So part of the conversation, part of the plan that Aubrey's touched on there is obviously me helping drive the conversation, and it actually links into my performance framework with the areas of commands every quarter anyway. So actually there's a real opportunity not to increase demand, but actually finalise some of the demand that then feeds into the rest of the system as well. So again, certainly very happy when we come to our next meeting to say where we are in terms of the planning, where it's going, and some of the feedback is literally from areas as well.
Okay, no, that'd be helpful, Jason. Thank you. Any questions, queries then from colleagues? Okay, thank you. We shall move on then to agenda item 19, which is again something we see each year. The value for money and efficiency plan for the year now underway. I mean, this has got your name against it, Sharon. Do you want to say anything by way of introduction?
Yes, I will say something. It's basically the same format as the previous year. It's a fairly high level strategy stroke plan, which indicates the principal projects, programs of work that we'll be undertaking to deliver value for money and efficiencies in the way we operate. So it tends to deal with the big ticket items and allow the force to operate more efficiently, such as agile working, command and control, which is still going, and any new projects put on that. And it's one that will be, it's those projects that will be monitored through the change board and the whole programme of change. And obviously we seek to capture the benefits which will be realised from these to report back in our annual reporting.
Okay.
No, I sound like a broken record here, but it could do with a little bit of updating to say that any learning that we get from our different ways of working during the COVID crisis may feed into these value for money efficiencies. Maybe you need to have just put a little comment in there.
Can I just comment? You're quite right. One of the things that was not agreed as yet when we actually put the value for money plan together as one of the supporting strategies for the budget is investment in Office 365 and using Microsoft Teams for more remote meetings, etc. We were already considering that investment before COVID came along, and obviously it's accelerated that in importance because we've, as you say, we've learned that we can function and it saves quite a lot of travelling time.
Yeah, Exactly. Travel time and cost, I don't know. It's just a whole new world we're living in. There are some good things as well. Let's not always be pessimistic.
Absolutely.
Okay.
I just make an observation as well. It's actually entitled Plan for 2021, but it's not a plan for what to do in 12 months. It's got a far longer timescale. I think it might be helpful to embellish some of the things or to incorporate some of the things we've talked about earlier. If it was called 2021 and future years, obviously it's the next one we're going to be producing, but looking at more a longer term one, which would be annually refreshed. So 2021 to and onwards.
Yes, you're quite right. Some of the programmes will be delivered in year, but you're quite right. Some of the longer ranging ones do span more than 1 year.
And I think we're hopeful that the new corporate planning process is going to allow us to develop that sort of longer perspective on the whole value for money, investment, benefits to be realised, etc. So looking forward, the budgeting process and the corporate planning process, we're hoping, I think, to bring those close together as part of this next cycle.
Okay. Okay. Any other questions, queries from colleagues?
Could I just affirm, Chair? On the current performance table, I was just looking at that and also tying that back to the reserves piece of work that was in the SIPFA review on page 12 and 13. And I guess it's just looking at that total picture. You see where I'm going with effects, where you've got cheap, but you're also burning reserves. Because I think what you've got, that's the double whammy story that's perhaps not coming out. Does that make sense? Where effectively, even though we're really, really cheap, we're still having to burn reserves. So we don't have a lot to spend and we're spending it. And I'm just thinking if there's a story there. Sorry, Julie, go on.
Well, I was just going to say, of course, what we had during 1920 was a complete volte-face from the government in terms of, we'd been planning for many years for gradually reducing resources, using up reserves, etc., and then from about July, August onwards last year, all of a sudden it's all about investing in policing and additional money and so on. So all of our plans and the budget and so on, and our narrative, it's all catching up really with that complete change in direction. So yes, we have been using reserves. We're not using reserves anymore. I mean, mainly because they're pretty much run out, but also because the government is providing funds, not to the extent that we would like and we believe we need, but the government is providing additional funds for additional recruitment of officers, etc.
Yeah, I think you're right. For me, it was just that catch up of the narrative and that stuff that I think were really helpful, and also probably ties into some extent about the going concern conversations and everything else. I don't want this to be a paper exercise just for the sake of completing it because we asked for. It's about actually having that narrative that literally we have a consistent narrative that can be used many times across different formats, as it were.
And I think we've tried to reflect that in the statement of accounts and the CFO narrative, etc. Because that's where that comes out. I think really that idea of being on a reducing trajectory and now all of a sudden being on an increasing trajectory, and it takes a bit of time for the organisation to catch up. It's a bit like the super tanker, isn't it? Turning it around.
And that lag, I think, is again that narrative. It starts becoming consistent. So everything that you see, whether it's SIPFA, the CFO report, it has that same thread all the way through. Is really important, I think, going forward.
Could I just observe as well that there's probably going to be less certainty going ahead about what the overall financial context is going to be. So we're therefore looking at our efficiency plans for the future. We need to make sure that we're operating as efficiently if things are far worse than we expect, whilst being able to cope with additional resources. So we need this flexibility building in and a sensitivity to the fact that we just haven't really got a clue about what source is going to be available in the future.
Yes, I mean, we're just about to start refreshing the medium-term financial plan because, you know, this is the start of the budgeting process, and we'll be looking at that in Police and Crime Strategic Board with the PCC and the Chief Constable in a couple of weeks. You know, looking at what assumptions should underpin our planning, the timescale for it, etc. So that's really live at the moment.
And the sensitivity analysis around it, because it is so unclear.
Yeah. I mean, you know, we've lived through a lot of uncertainty, haven't we, since 2008 and the financial crash and the subsequent reductions in public spending. So we do have some experience of living in uncertain times, but, you know, it's the disciplines, isn't it, as you say, of putting the plans in place and looking at the sensitivities, etc.
I think the depressing thing there is it took us a decade to recover from that. And we just had the no austerity budget just as COVID was kicking in, and COVID's probably going to drill a bigger hole in the nation's finances than the banking crash ever did. That's the depressing thing, I think. But, well, that's not an issue for us today, I don't think, directly anyway. Are we happy with that paper then? Okay. Can we move on then to item 20, which is our own committee forward plan? Gillian, do you want to say anything about that?
The only thing I would say is picking up on a point earlier in the meeting about the Treasury Management strategy.
Yeah.
I think I've currently got that for an April meeting, but I will actually amend it and we'll target the January meeting instead.
Yeah, no, that would be sensible. Yeah.
Okay.
Just a couple of things from me about logistics. You mentioned in the covering paper about self-assessment on the 23rd. We'd need some sort of context to do that in, some sort of paper, some sort of background. I think we've probably talked about this at some point before. Is there not some sort of checklist around that we can sort of dig out and use to undertake that work?
There is, yeah. There's a SIPFA checklist, and I'm debating whether to maybe speak to Mark at Mazars as well about whether we do a kind of a separate specific session just to go through that, because it's a little while since we had the audit on the effectiveness of the committee. So
yes,
might be a way of just wrapping.
In my time, which is 2 years now.
Yeah.
So I think that would be useful. And who knows whether this will be a virtual meeting or a real meeting, all 3 weeks apart or something, who knows. But we'll just have to wait and see. But I think we do need to do it, and September seems a sensible thing.
Yes.
The other thing you've got down as provisional is myself doing the sort of mini appraisals of the members in a couple of weeks' time.
Yeah.
I mean, my preference there, but it might not be possible, is to do it face to face.
Yeah. And certainly that's probably a hangover from when it was going to be a face-to-face workshop, and we'd normally put you in some time before the accounts workshop to cover all that off.
Myself with each of the 4 members. So I wonder if
we can pen that.
Why don't we just do that virtually? 15 minutes.
But
there's the difference. What's the difference?
I don't know.
David can't flick things at us.
Exactly. Yeah, exactly. Richard can't stand behind us and bang your fist on the desk.
Can't lock us in the room and not allow us out until we've actually agreed to his assessment. I'm happy to do virtually. It's up to you guys.
Okay, I'll do it virtually. I'm not bothered.
Well, that's time then. We'll have to do it as part of the accounts workshop. If you want to do that, that's fine. But John, you'll have to set up 4 individual sort of 10-15 minute meetings.
Yeah, no problem at all.
Before a pre-meeting.
Yeah.
As it were. So we're probably starting about noon or something then, with some 15-minute sessions, 4 of them, then a half-hour pre-meeting, then the workshop. That's the way we'd have to work.
Yeah.
Okay.
I think half hour will be enough for the pre-mint. We started at 12:45 today. We didn't need all that time. We could have started at 1. So you don't need to have don't need a 45-minute pre-mint.
That's fine. Has anyone any other questions on the forward plan?
Yeah, can I just note that the meetings we've got, I think, are on the 23rd of September and the 28th of October. They're 5 weeks apart. Now, I might have missed some emails about diary dates, but it strikes me they're incredibly close together. If we are going to hold them so close together. I think we've got to think about whether certain items like full audit progress report updates actually come to both in the same way, follow-up reports and so on. And I don't know whether it's feasible even to consider anything like perhaps moving the October one back a couple of weeks into November. I
think it was partly to do with the accounts, approving the accounts, or the financial statements. Depends, I guess, on confidence about the September deadline for the external audit.
Yeah, because we obviously moved it in the first instance to recognise that we wouldn't meet the July.
But isn't the September meeting the July meeting?
It is.
Yeah.
God, it's confusing.
It is.
So maybe
perhaps we can just see how things are going, and if it's looking likely that we need to move the October one, then move it into November a bit later.
And get it in between. It will be January, the one after, won't it? So
yeah,
we just keep that fluid then at the moment. And
yeah.
Consider next time whether to have it in October or November. Okay.
Okay.
Okay. So we've now got to the point where we're closing the public meeting. So we shall now have to exclude the